All right, let's get started. Appreciate you joining us on this June afternoon. Today, my name is Neil Fauerbach. I'm a partner with Smith Gesteland. We're thrilled to host this webinar. Joining me today and your presenter is Julie Bogle, one of my partners here at Smith Gesteland. She works with businesses on multi-state sales and use tax consulting, training, systems analysis, planning, audit management, multi-state income tax planning, property tax issues, cost segregation, entity selection, and other organizational issues. Julie got her bachelor's degree from the UW in Madison and her law degree here as well. A little bit about Smith Gesteland. Go to the first slide, Julie. There we go. Smith Gesteland is a over 60-year-old CPA firm based here in Middleton. We serve primarily the southern Wisconsin area. We're industry-focused, manufacturing, supply chain, construction, real estate, nonprofit, professional services, and the high-tech industry. And we focus on helping, we're trusted advisors, helping family-owned and closely held businesses with growth, profitability, succession planning, and one thing that we're really well known for is our 80-20 services. We're not here to talk about that. If you're interested in it, you can contact us. On your screen, you should have a control panel that will allow you to ask questions as we go through the seminar, and we will take those questions as they come up. In the appropriate order, and you have to, if you look at it, there's a messaging box where you type in your questions and send it to us. We'll monitor as we go. So let's start the session with Julie Bogle. Take it away, Julie.
Thanks, Neil. Hi, everybody.
I need to unmute. I need to unmute Julie.
Whoops.
Just a second. There you go. Right now, Julie.
Hi, everybody.
Hi, everybody. I think I'm unmuted now. I hope you all can hear me. Just a heads up that if you have any sound problems, please go ahead and send us a question, a comment, and Neil will address those. The other thing to let you know is you all should have received some materials via email. Those materials are important. We're going to be referring to those today. If you haven't printed those out, that's okay. You can print them out afterward. We'll be showing all the slides that you'll be seeing and that we'll be talking about. It's just those supplemental materials that I want to make sure you all have. Because as we talk through some of these issues, there are some important pieces of this that don't appear in the slides. Second, we do want your questions. For those of you who've seen me present in person, I tend to be a little like a freight train, just going. And so when people ask questions, it's very helpful for me because I know then what you're thinking, what your questions are, what your issues are, and then I can address those during this time. Now, we only have an hour, so we're going to go over this pretty quickly, and I do want to let you know that if you have questions after the presentation, you're welcome to email me. My email information is on the last slide. Also, for those of you who may be wondering where Peter is, Peter Snowman is generally my co-presenter for sales tax issues. He's in Vienna, poor thing, today, so he will not be appearing with us. We couldn't get him to fly back and stand here with us, but he's with us in spirit. And questions that you have, follow-up questions from this presentation, can be sent either to me or Peter. So we're going to begin real quickly with what is subject to tax. And this, you must understand, is the base for everything we're going to talk about. It's the basis for all sales and use tax, and especially with regard to manufacturing. I want to make sure that you understand that all tangible personal property and certain services and equipment rentals, I threw that in there because I want to make that clear, are taxable under Wisconsin law unless an exemption applies. Now we're going to go into more detail about what is and isn't tangible personal property, and we're going to talk more about what are the taxable services. later in the presentation. But I want you to get this down now because your mindset should be everything is taxable. There are exemptions that apply to manufacturers, and many of you know that, and that's great. There are three. There really are more than three, but we're gonna summarize this briefly to say there are different types of exemption under Wisconsin law, and the three main types are based on who you are. So if you're a school or the federal government, you get special sales tax treatment. There are exemptions based on what you're buying, so food and drugs and newspapers aren't taxable under Wisconsin law. And then there are the types of exemptions that are based on how you use what you're purchasing. And this is the type of exemption we're going to be talking about today. And it's important to understand that that exemption is different from the other types of exemptions because it's all based on how you're using the product that you're buying. Very important to understand that and keep that at the top of your head. So exemptions under Wisconsin law are narrowly construed. That means if you're not sure if it fits, these are all facts and circumstances types of analyses. If an exemption doesn't fit your facts and circumstances, it probably doesn't apply. So don't assume that just because you're a manufacturer, everything you buy is exempt. You need to make sure that you're following the letter of the law and Department of Revenue guidance as to whether or not an exemption is going to apply to a particular purchase in the way that you, as a manufacturer, are using it. The burden of proving an exemption is always on the taxpayer. So when you are audited, and note I say when, not if, it is your burden to prove to an auditor that an exemption applies. Some practical tips for exemptions, things that I commonly run across when talking with manufacturers. One of the issues we have is that the accounting people in a manufacturing firm don't necessarily know how a particular purchase is used. So one of the things that we do when we go in and help people work through a process is we make sure that production and purchasing, the people who actually know how product is used, we make sure they're communicating with the accounting department so that the accounting department can make a reasonable determination about whether or not a particular purchase should be treated as exempt or not exempt. Communication is the key there, and we often see that it doesn't exist in quite the way that we would like it to. Now there are many exemptions we're going to talk about today. Specifically, there are 6 exemptions, and 4 of them are specific to manufacturers. So understand that those 4 first exemptions here apply to manufacturers. They apply because you are a manufacturer. The other 2 exemptions listed below, containers and waste reduction, they apply to manufacturers, but they can also apply to other businesses as well. We're going to focus mostly on the exemptions specific to manufacturers. So what is manufacturing? Well, that begins when the raw materials are conveyed from storage in your plant to the manufacturing line. So assuming raw material has come in, it's on the loading dock or it's in storage some way, you're going to pull it off of storage and you're going to start using it on the production line. The conveyance from that storage place to the production line is the beginning of manufacturing. It's important to know this. So we're going to spend quite a bit of time on sort of the scope of manufacturing. Manufacturing ends, whoops. I'm sorry, I hit a slide that I shouldn't have. All right, what is manufacturing? I'm sorry, we're not far enough back yet. Okay. The manufacturing ends when the finished product reaches its first point of storage in the same plant. And we're going to go over what isn't the same plant. Now, you notice that I'm being very specific in the language that I use. When I'm talking about the scope of manufacturing, when I talk about conveyance, when I talk about storage, when I talk about the manufacturing line. The reason I'm being so specific is, again, because exemptions are narrowly construed. So I have to be very specific when I describe these things so that you understand how limited some of these exemptions are. and what they apply to and what they don't. So manufacturing ends when the finished product reaches its first point of storage in the same plant. And again, we're going to talk about what the same plant means. The reason scope matters is because remember that first slide that had 4 different exemptions that apply to manufacturers? If you're not manufacturing, first of all, if you're not a manufacturer, but secondly, if these items are used outside the scope of manufacturing, they are not exempt. Or they may be exempt for another purpose, but they're not exempt as manufacturing exempt. And I know that sounds confusing, but as we go through this, you'll hear me refer to scope and when manufacturing begins and when it ends. Those 4 exemptions on that slide that listed them, the one for machinery, one for parts and consumables, ingredients, one for energy, and the other for qualified research. If they are used within the scope of manufacturing, after manufacturing begins and before it ends, then they may be treated as exempt. Anything used before manufacturing begins or after it ends likely will not qualify as manufacturing exempt. So what's included in manufacturing? Well, conveying work in process directly from one manufacturing process to another in the same plant, testing or inspecting the product during the manufacturing process, storing work in process in the same plant where the manufacturing occurs, and packaging units when the packaging is part of the unit for sale. So again, these are very specific comments about what's included in manufacturing. If you, for example, you are a manufacturer who sends your product out to be packaged somewhere else, that is not part of your manufacturing process, okay? Because it's not in the same plant. If you're storing work in process in the same plant where the manufacturing occurs, it's likely that may be exempt. But if it leaves the plant and goes somewhere else to have something else done to it, it's likely the manufacturing process has ended. It may begin again, but at that point it's ended once it leaves the plant. So the meaning of plant becomes very important. And it's very narrowly defined. A plant is defined as a parcel of property or adjoining parcels of property and the buildings, machinery, and equipment that are located on the parcel. So if I have plants, I have 2 plants for the same manufacturer and they're across town from each other. That is not one plant. Even though the manufacturing process may begin in one manufacturing plant and end in another manufacturing plant. That is not the same manufacturing process. It has stopped in one plant and it has begun in another. So what's not included in manufacturing? Well, fabricating or processing that doesn't rise to the level of manufacturing. So, for example, if you have someone who is putting decals on T-shirts, that's not manufacturing. If you have someone who is taking parts and putting them into a kit, that's typically not manufacturing, that's assembly. Testing and storage of raw materials, that's not part of the manufacturing process. Remember that begins before manufacturing begins. If you send materials out to be tested to a third-party testing facility, that's not part of manufacturing for you. And it's not part of manufacturing for them either, by the way. Storage of finished goods and inventory. Remember that we said under the scope of manufacturing that manufacturing ends when goods reach their first point of storage. So it's very important to remember that that forklift that picks it up from the first point of storage and puts it on the truck is not manufacturing exempt, okay? Because it happens after manufacturing ends. And storage or transportation of work in process between 2 plants is not manufacturing. So again, we've got this manufacturer with plants across town from each other, putting those products into a bin, onto a truck, over to the second plant, not part of the manufacturing process. And the reason that's important is that those transportation bins may be expensive, but they don't qualify for an exemption. They're taxable. Now, fabrication versus manufacturing, again, is an important concept to remember. Manufacturing, we always say, and I know that the slide says it a little differently, but for years and years and years, we've always said that manufacturing is a new name, form, and function. Name, form, and function. All three of those requirements have to be met in order for what you're doing to rise to the level of manufacturing. So if you're not changing the name of something, you're not changing the way it's used, and you're not changing what it looks like, you're not manufacturing. So for example, if you are a company that paints doors or stains wood, you are not a manufacturer. You may have taken some raw wood and you may have stained it so that it can be used in some capacity, but that is not, does not rise to the level of manufacturing. The second point on that slide is that the application of labor itself doesn't rise to the level of manufacturing unless the finished product is clearly and distinctively new and different. So again, it's just another way of saying change the name, form, and function of of your raw materials. So now that you understand the scope of manufacturing and what it is and what it isn't, now we can actually start to talk about why that's important. All these exemptions, these next 4 exemptions, as I said, they rely on the idea that what you're doing is manufacturing. It rises to the level of manufacturing. It's within the scope of manufacturing. So assuming that that's true, then we can start talking about the exemptions. So the first exemption for manufacturers is the one everybody thinks about, and that is machines and specific processing equipment. So it's the machinery that you're using on the line, it's the specific processing equipment, it's the repair parts for those machines, it's the repair service for those machines. But these items have to be used, keywords, exclusively and directly in manufacturing tangible personal property. And again, every word on that slide is an important word and serves to restrict the exemption to activities that fall solely within this language. Has to be machines, has to be exclusively used, has to be directly used by a manufacturer in manufacturing tangible personal property. So what is a machine? Well, a machine can include more than you think. It doesn't have to have moving parts anymore, used to, doesn't. It is basically, it has to have activity. It has to be principally and primarily a significant contributive factor in the actual manufacture or production of the product, which basically means it just can't be passive. It can't be sitting there. It has to actually do something to make the manufacturing process move forward. So that's a machine. It has to be used and have a function that furthers your manufacturing process. It has to have some sort of activity, even if that's a human being behind that activity. It has to move in some way. It can include small hand tools, and again, this is something that's evolved in the law over time. There used to be a whole body of law associated with a machine and how it had to work and what it had to do. Now that law has loosened up to an extent where it can include a screwdriver and a pliers and a hammer. It can include repair and replacement parts. That's part of the statute. And think about that. I mean, that can be a broad range of things that are used in the manufacturing process. So augers, bits, dies, wheels, jigs, all that stuff is part of the manufacturing process as long as it's used exclusively and directly in manufacturing. Note here, your slide doesn't say this, but I want to make this point really clearly. What isn't a machine or specific processing equipment is a real property component. So if you've got an HVAC unit and that HVAC unit heats or cools your manufacturing floor to an extent because your product has to stay cold or warm, that is still not considered part of your machine and specific processing equipment because it's a real property improvement impacting the entire area. And it's part of your general building HVAC. That is not going to be considered a machine and specific processing equipment because it's a real property improvement. And there may be questions on that, so let me know if there are. Safety attachments. This is another area of the law which has evolved over a long period of time. It used to be that safety attachments, there was a question about whether or not those could be included in this machines and specific processing equipment. And now it's quite clear that the safety attachments on a machine connected to a machine can be considered part of the machine, part of the specific processing equipment, and part of the manufacturing exemption. So that's important. But I'll warn you that certain things cannot be considered a safety attachment. An example would be for a manufacturer that has a laser, and they have a laser screen that's not attached to the machine, it's freestanding, it's standing in the middle of the floor. That is not, most likely, depending on the facts of and circumstances of the case, most likely not going to be considered to be used directly in the manufacturing process. It doesn't impact the manufacturing process. And furthermore, it's for the safety of the people, not for the purity of the product. So that is not going to be considered manufacturing exempt under most circumstances. Now, safety attachments, again, that are attached to the machine will qualify, but not those things that are freestanding. So what's exclusive use? Remember that I said every word on that slide, let's see what slide that was, slide number 16 was important. And one of the words that's very important is exclusive. Remember that in order to be exempt, the machine or specific processing equipment has to be used exclusively in manufacturing. That means you can't use a machine in the office. You can't use it in the loading dock. You can't use it in I don't know where else you might use it, out on the somewhere else. It has to be used exclusively in the manufacturing process, and exclusive means 95% or more. So it's a pretty high threshold. So examples of exclusive use, it means that they have to be used by the manufacturer in manufacturing to the exclusion of all uses. Note that if it's used in testing products throughout the manufacturing process, it may be exempt. But if that same equipment is used to test the raw materials before the manufacturing process again begins, remember, again, we're going back to the idea of scope, when manufacturing starts and when it ends. That testing equipment, as long as it's used more than 5% of the time to test raw materials or the product at the end, it's not going to be exclusively used in manufacturing. And the same is true for conveyance equipment. And this is a big problem for some manufacturers. Conveyance equipment that's used before the manufacturing process begins or after it ends, outside the scope, is not going to be exempt unless it's used less than 5% outside the manufacturing process. So as a best practice, what we generally recommend is that you assign specific testing equipment to the manufacturing process versus the materials testing process. If you need to, whatever it is, to test anyway, use one in the testing area for the raw materials or the product after it's been manufactured, and use the other one in the manufacturing process. Now, I know that's not as easy as it sounds, but if you can do it, do it. And that's the same for conveyance equipment as well. Those forklifts are expensive. If you've got a crane situation where that crane could be used outside the manufacturing process, but you've got another crane, to whatever extent you can set up the plant floor to take advantage of that, go ahead and do that. If you have clearly set up your delineated areas for things like forklifts and conveyance equipment and testing equipment, auditors will generally agree with you that you have been careful to make sure that those items have been used exclusively in manufacturing. So back to slide 16, remember that we said that it also has to be used not only exclusively in manufacturing, but directly in manufacturing. And so what does direct mean? Well, it must physically impact the manufacturing process. So again, we can have, it doesn't have to be a machine with moving parts, but it does have to actually impact the manufacturing process. It has to be an agent of change, in other words. So there are things, of course, that are not used directly in manufacturing. And we get this question a lot. We say, someone will call and say, well, you know, I need this HVAC because, a perfect example would be a lab hood. All right, it's maybe used for testing raw materials, maybe, or maybe it's used in the manufacturing process. We have to have a lab hood because otherwise the people who are, you know, doing the whatever the manufacturing process is, you know, for OSHA requirements, it's necessary for them. That is not directly impacting the manufacturing process, and that lab hood is probably not exempt under most circumstances. So communication devices, if you've got to be relaying information back and forth across the manufacturing floor. Most likely that's not exempt. I suppose there are circumstances where it could be, but most likely it is not exempt because it's not directly impacting the manufacturing process. Now you may say, well, it's necessary, I have to have it, but it's not directly impacting the product itself. So examples of equipment, and this is taken directly from the Department of Revenue publication, and I'm going to plug that publication right now. Publication 207 is the sales and use tax information for manufacturers. When you have questions, do consult that. There are a lot of good examples in there, and I would say the best part of that publication are the appendices because they give a lot of very specific examples in the back about what the department has decided is and isn't manufacturing and what is and isn't exempt. So very, very helpful publication. So examples of equipment that's not used directly. So tables and stands that hold the equipment, sure they're necessary, otherwise the equipment, you know, would have to be on the floor or whatever. Yes, they're necessary, but they don't directly impact the manufacturing process. Now we could quibble about that, but the department has decided that those things are not used directly enough in the manufacturing process. The exception would be if you bought a machine and it came with the table and it's attached. So also get this question all the time: storage racks, parts bins, raw material containers. Now these may be important, but they're not generally going to be directly used in the manufacturing process. Tools used to repair the manufacturing machines, and let me be careful about this. So remember that I said that a screwdriver, hammer, or pliers could qualify for a manufacturing exemption. This is a perfect case where exclusive use is important. If you have those same screwdrivers being used to repair the manufacturing machines, they are not considered to be used exclusively in manufacturing because they're repairing the manufacturing machine. Now, if you hired an outside provider to repair your manufacturing machine, that would be exempt. But using your own screwdriver means that you're using that screwdriver in a way that is not exclusive to manufacturing. And I hope that's clear. I'm sorry if it's not. I know it's confusing. So storage tanks are a big deal. They come up a lot. And the issue with storage tanks is, think about it this way. If a storage tank is simply passive, it's a passive receptacle for raw materials used in the manufacturing process, they're never going to be exempt. The storage tank has to directly impact the manufacturing process. So they need to agitate or mix raw materials. They have to do something to the raw materials to make them change in some way. Now, tanks that cool or heat passively, so they're maintaining, and this slide is a little misleading. I changed it, but it didn't get changed, so I'm sorry about that. So tanks that cool or heat passively, they're maintaining a cooling or a heating. They are not considered used directly in manufacturing, if that's all they do. If they're actually bringing something up to a particular temperature or down to a particular temperature, they may qualify as actively impacting the manufacturing process. But something that is a mere passive receptacle is not going to qualify.
Julie, got one question. Can you repeat the name of the publication?
Sure, I'm happy to. So the question was the name of the publication. It is Sales and Use Tax Information for Manufacturers. But if you go to the Department of Revenue website, just search for publication 207. 207 is the one that you want. So we've described the manufacturing exemption for machines and processing equipment. Okay, that is unto itself one of the 4 exemptions for manufacturers. Exemption number 2 is similar in that it has to be used in manufacturing. Remember the scope of manufacturing. It has to be used directly and exclusively in manufacturing, but it's for the ingredients and the consumable supplies. So basically the inputs and also consumable supplies. So so this is, you know, your raw steel. It's your, you know, your, I don't know. Tell me something, Neil. What's used in manufacturing? I don't know. Silly putty. I have no idea. Grease, yeah. It's things that go into your product when they're finished, but it's also those things that are used during the manufacturing process that are consumed and used up. Now, the way that this exemption is different from the machine exemption is that there's an additional requirement. This must be manufacturing tangible personal property, just like the machine exemption, but the tangible personal property must be destined for sale as tangible personal property. And we'll talk in a minute about why that's so important and catches so many people up. The product, the purchase must become an ingredient or a component part of the article of personal property, or it must be consumed or destroyed. So my example of raw steel would be the first thing, and the example of grease would be the second thing. The raw material, the raw metal goes into the final product and is actually resold to the customer. The grease is consumed or destroyed in that process. You don't actually sell it to the customer. It doesn't become an ingredient, but it's still exempt if the requirements are met.
We have a correction here.
Okay.
Julie, the publication is actually called 203.
Oh, shoot, 207, I'm sorry, you're right. 207 is the contractor publication. 203 is the manufacturer's. And you know what's funny is I'm standing here looking right at it. So I apologize. Thank you. It's 203, not 207. 207 is for contractors, 203 is for manufacturers. So examples of consumables, gases, lubricants, filtering clay, foundry sand, all these things. The interesting one for most people are going to be the last two. So cleaning agents and solvents for maintaining the manufacturing machinery. It used to be that cleaning agents for a clean room, like a food processor, like if you were a cheese manufacturer and your walls had to be sterile. It used to be that you could treat those cleaning agents for those walls and floors as exempt. That's no longer true. That changed in November of 2011. So those cleaning agents and solvents used to clean the room are not exempt. Those used for maintaining the manufacturing machinery are exempt. The other important distinction to make on this slide is the supplies used to maintain the purity of the product being manufactured. So we have gowns or hairnets or gloves. If the supply is used to maintain the safety of the people creating the product, and it's not necessary to maintain the purity of the product being manufactured, it's not exempt. So shoe covers, things like that, where you're just trying to keep your people clean or safe, that's not going to be exempt unless it actually is necessary to maintain the product. So what is tangible personal property? Well, tangible personal property is any property that can be seen, weighed, measured, felt, or touched, or that's perceptible to the senses. A couple of distinctions here. It's not real property, and we're going to talk about that in more detail in just a minute. It's also not digital goods. Digital goods are not considered to be manufactured for this purpose. So there may be other exemptions that apply when you're making digital goods, but not this particular section of the statute. So so keep that in mind, and not real property. The destined for sale requirement, remember that I said unlike the machine exemption, this consumables has an ingredient has an additional requirement. The product has to be destined for sale as tangible personal property. So it excludes certain things. So if I'm a manufacturer and I make my own dies and molds, and I don't sell those dies and molds to my customer, I just use them internally, those are not exempt. I'm sorry, the ingredients in those dies and molds are not exempt because they are not destined for sale. And if I'm manufacturing samples or things that I give away, those ingredients and consumables used in manufacturing the samples or the items I give away are not destined for sale. It also, the destined for sale requirement also excludes the consumables and ingredients that are used by a manufacturer that manufactures and then installs real property improvements. So examples would be anything that goes into a building that becomes real property, doesn't remain tangible personal property. So cement, for example, if I manufacture cement and then I install that cement as a base for a building, my ingredients in creating that cement are not exempt. And that's true for certain countertops and certain cabinetry, ductwork, prefabricated buildings. Now the reason I say certain countertops and certain cabinetry is sometimes when you install a countertop, it becomes real property. Sometimes when you install a countertop or a cabinet, it remains tangible personal property. So the reason you have Publication 207, you have a chart that you were given as part of your materials today, is because I want you to use that chart to make sure that what you're installing becomes real property, or make sure that it remains tangible personal property even after you, the manufacturer, have installed it. And another distinction that I want to make that's so important to keep in your head is that if you are a manufacturer and you pay a third party to install something and you're billing your customer for an installed whatever it is, say it's a countertop, you are considered the installer for that purpose. So again, it all goes back to whether or not you can treat your consumables and supplies as, your consumables and ingredients as exempt. You can if they're destined for sale as tangible personal property. You cannot if they're not destined for sale as tangible personal property. So I'm making building components and I'm then installing those building components. My raw materials for those building components are taxable to me. My machinery and equipment are not, because remember the machinery and equipment exemption did not require that it be destined for sale as tangible personal property. But my ingredients in that whatever that building component may be, those are taxable to me. An exemption does not apply. So the important thing is to use that chart 207. You've got it in your materials. It's an interesting chart. It includes a couple of different things, and we'll go over it again a little bit later when we talk about use tax. But what it does is it tells you whether or not you need to charge sales tax when you install something. It also tells you whether the Department of Revenue would treat that as real or tangible personal property. So for purposes of this exemption, you need to know whether when you install that it's going to be real property or tangible personal property. And that will tell you whether or not your ingredients are exempt for you. So changing gears just a little bit, items that are not exempt, remember that we talked about things that are used to protect your people. They may be required by OSHA. They may be required under, under health and safety law, but they are not considered part of your used directly in your manufacturing process. So they are not going to be exempt. So safety glasses and shoes and clothing and gloves that are used to protect the worker. The cleaning supplies used to maintain a clean room. The cardboard that you slide under the machine to catch the overflow. And shop towels, if they're used to maintain manufacturing equipment, will not be exempt. Now there are certain cases where a towel service would be exempt, again, if it is used solely to maintain the purity of the product, but not if it's used to maintain the machinery. So what do you do if you are a manufacturer who sometimes installs real property components and sometimes sells your product or installs a property component that remains tangible personal property? What do you do about that? Because, you know, frankly, when your stuff comes in, most likely you've treated it all as exempt because it's an ingredient or component part of what you're doing. So what you need to do in that case is you need to calculate percentages. You need to calculate a reasonable percentage of your exempt purchases versus your taxable purchases, and you need to apply that percentage to your ongoing purchases. You need to calculate that on a reasonable basis, and you need to document how it was calculated, because when you are audited, the auditor wants to see, wait a minute now, half the time you install this as real property, half the time you sell it as tangible personal property. What are you doing with your inputs? What are you doing with your ingredients? You need to have applied this rule using percentages, and you need to pay use tax on the percentage of the materials you then install as real property. So it can be used for your ingredients. It also can be used for the items consumed in your manufacturing process. So that is the ingredients and consumables exemption. The third exemption is the fuel and electricity exemption. And again, this applies solely to a manufacturer, and it is, again, it has to be used within the scope of manufacturing. It can't be your general energy. It can't be the stuff that heats the office. It can't be the stuff that heats the plant floor or cools the plant floor. It has to be used directly and exclusively in manufacturing. So, but it's not just, you know, the gases that you get shipped from, you know, air gas. It can also be your actual energy from Alliant or MG&E or whatever that, you know, is used to run your machines. The important thing about this, though, is that you need to make sure that you've calculated it and that you can defend it on audit. Remember that every burden for an exemption is on you. So if you have treated 80% of your energy use from Alliant as exempt, you need to be able to show the auditor why and how you came up with that. You can have a study done by companies that do this, but you can also do it yourself. Calculating the percentage of exempt fuel, it has to be reasonable, it has to be documented. It can consist, what I most commonly see if they haven't had a third-party study, is usually it's a list of machines, the consumption per machine and the number of hours it operates compared to the total plant energy use. And sometimes you can cut an end game around this by turning all other energy use off and, you know, watching the meter to see how much energy is used. That would rarely, in theory it should work, but it rarely works as well as it should. So generally speaking, you need your engineers or your plant production people to step in and do this study for you. Remember to adjust it. I had a situation where a client was perfectly fine with their energy calculation until they laid off their third shift, and they forgot to change the percentage of exempt use they had, and then they had an audit problem. So in other words, the client had calculated their percentage of energy use, exempt energy use, by looking at what machines were working, how long they worked, how many hours, you know, blah, blah, blah. But then they laid off the third shift, and they forgot to adjust the document. And that was a significant problem on audit. So exemption number 4. This is the last of the exemptions that applies to manufacturers. And now this also applies to biotechnology, but we're not talking about biotechnology today. We're talking about manufacturers. So we're going to treat this as a manufacturing exemption. This exemption became effective as of January 1, 2012. So prior to that point, it didn't exist. It applies to those who are primarily engaged in manufacturing or biotechnology. So this is an exemption that applies only if you are primarily a manufacturer. Primarily is defined as 50% or more. and it applies to items, again, this language, exclusively and directly used in qualified research. So very similar to other exemptions in that respect, exclusively and directly used in qualified research. So primarily engaged in manufacturing, again, means that you have to have more than 50% of your activity in manufacturing. And primary activity is determined by a reasonable measure of all activities conducted in Wisconsin. So if you have a plant here that manufactures and you've got some other plant down south that is doing something else that doesn't rise to the level of manufacturing, not a problem, because your primary activity in Wisconsin is going to be manufacturing. So, and you know, looking at the list of people who are attending today, I don't think any of you probably have a problem being primarily engaged in manufacturing. Now again, we have an exclusive and direct use, and again, exclusive use means at least 95% of the total use must be in qualified research. And the question we always get is, if the other requirements are met, can we have a combination of manufacturing and qualified research for a particular product? So, for example, if we're talking about testing equipment that is used in research and development and also used in manufacturing, that equipment does not need to be used 95% in research and development and 95% in manufacturing. It's good enough that between the two of them, it's used 95% of the time in either qualified research or manufacturing. So qualified research, for those of you who've ever had a research and development study, if you think about your income tax returns, you're claiming Section 41 research and development credits. The Wisconsin law basically mimics the requirements under that federal language. So it has to be undertaken for the purpose of discovering information, which is technological in nature, intended to be useful in the development of a new or improved business component, substantially all the activities of which constitute elements of a process of experimentation relating to a new or improved function. The burden of proof is on the taxpayer, just as it is for a research and development credit under federal tax rules. All of the requirements listed have to be met, and the tests must be applied separately to each project, product, or process. And again, for those of you who have been involved in research and development, who are used to taking the R&D credit, you know what I'm talking about. You have to distinguish between each process and each product that you're creating. You can't generally say, well, I am generally involved in research and development, and that's good enough. It's not good enough. So things that, again, mimicking the federal rule, Section 41, what is not qualified research? Well, it's not research that relates to style or taste or cosmetic. It's not research that happens after commercial production ends. It's not, research after commercial production begins. If you're tweaking something, not changing it, not creating a new product from it, it's not qualified research. It's not duplication of an existing business component. It's not a marketing study. It's none of that stuff. So the documentation that's required for this particular exemption really mimics the research and development study documentation requirements, and that makes perfect sense because the language mimics the R&D requirements under Section 41. So let's talk about an exemption that does not apply solely to manufacturers. This is the container exemption. So again, we've left the realm of manufacturing. We may be a manufacturer, but lots of businesses can use the container exemption. So we're not talking about exclusively, we're not talking about directly, we're not talking about the scope of manufacturing. We've left the scope of manufacturing at this point. But of course, this exemption, again, narrowly construed, facts and circumstances based, and you need to meet all the requirements or it's not going to apply to you. So containers that qualify have to be used to transfer merchandise destined for sale to consumers. So one of the questions that I get on a routine basis is, I have bins on my plant floor where I store stuff internally. Do those containers apply? Do they qualify for the container exemption? And the answer is no, because those containers are not being used to transfer goods to your customer. Now, remember remember that we talked about plant and the importance of the definition of plant. If you've got two manufacturing plants, one's across town, those are two different plants. The containers that you're using to transport the material from one plant to the other plant are not qualified for the exemption because those containers are not being used to transfer merchandise destined for sale to your customer. So containers that do qualify, very broad actually, boxes, labels, paper tape, barrels, sacks, Excelsior, anything that preserves or stabilizes, so dry ice. Doesn't matter what the container is made of, and again, one of those historical changes in the law, it does not matter at this point whether the container is returnable to you or not. So, but items that don't qualify would be advertising, flyers, packing slips, things like that that are not used to preserve the product. They're used for your own purposes beyond preserving the product to get it to your customer. Lumber or other materials used on a truck for bracing or blocking, not going to qualify. And then cardboard and paper and wrap. Now this is an example of something where you may want to use percentages. So we've got manufacturers that use shrink wrap to wrap pallets on the floor. So you're taking boxes off the line, you're wrapping it with shrink wrap to keep it safe, to keep it, you know, dust free, keep mice out, whatever you're doing. And then you're putting it back in storage. Okay? And then you're going to ship it out to your customer and you unwrap that pallet. That unwrapped pallet, that shrink wrap, is not exempt because it's not being delivered with the product to your customer. So that's another case where you would use a percentage. Okay, I have this much shrink wrap that I buy. About 10% of it is used on the plant floor. About 80% actually goes with my product to the customer. That's where you would apply a percentage. So we're going to switch to exemption number 6, and I realize we're going fast. We don't have a ton of time here. Waste reduction and recycling. This is, again, an exemption that does not necessarily apply only to manufacturers, although it's commonly used in the manufacturing area. It has to reduce the amount of solid waste, and in this case, solid is considered to include things like water. So solid is kind of loosely defined. Garbage, it can include semi-solids and contained gases, which is always surprising to people, but solid doesn't mean solid in that context. So examples of exempt recycling equipment, machinery used to produce fuel from waste product, refrigerant recovery systems, equipment used to remove impurities from lubricants in manufacturing. So those sump pumps that are actually attached to the manufacturing machine, those are exempt because they're part of the recycling equipment. One last comment before we go on to this next slide. What doesn't qualify would be trash containers. Even though those trash containers may be part of the recycling process, they're not going to qualify. They're not used directly in recycling. Or waste reduction. So let's turn the corner now. We've talked about all 6 of the exemptions, and now the question is, what do I do about it? When you are purchasing, you need to keep in mind that very first slide that said everything is taxable unless an exemption applies. So your key point is everything is taxable unless an exemption applies. Exemptions are narrowly construed, so if an exemption applies, great. Don't pay tax when you're buying it. If an exemption doesn't apply, then what do you do? If your vendor doesn't charge you sales tax, you have to self-assess use tax. Use tax is due, and again, this is important language, storage, use, or consumption of tangible personal property in Wisconsin. So those 3 words are pretty broad. Storage, even if it's momentary, even if it's here for 5 minutes and then leaves the state, it's stored in Wisconsin. Storage, use, and consumption. So why might a vendor not charge sales tax? Well, because it's an out-of-state vendor and it's not required to charge Wisconsin tax. Sometimes your vendors, especially service providers, they're not aware of their sales tax obligations. the most important reason, mostly for manufacturers, is because you've given the vendor an exemption certificate. So you've assumed something is exempt, or you buy a lot of product from a particular vendor, and some of it is exempt and some of it's not. Well, that vendor is never going to charge you sales tax once you've given them an exemption certificate. So you need to be able to pick up use tax on those items, and again, using a percentage or an actual invoice that you're paying. Also, manufacturers run into trouble when they remove items for inventory, for sales, displays, samples, or internal use. Those, again, you've got to be able to pick up the use tax on those portions. So again, having good processes in place is what this is all about. When auditors audit manufacturers, it is almost always that the liability comes on the use tax side, not the sales tax side. So manufacturers are pretty darn good at charging sales tax when they should. What they're not really good at is picking up use tax when they need to. And so when an auditor comes in and they're looking at your liability, what they're looking for is use tax liability. It's hard. It's hard work, and you have to have good processes in place. And those processes will determine how well you do on audit. So the best process, the best practice is to have a consistent review process for every vendor invoice. Every vendor invoice. Reviewing invoices, the people doing that, they should be knowledgeable about use tax issues. Lots of seminars out there, including ones given by the Department of Revenue, given by us. Lots of people do these seminars. It's important to get your training. For every single invoice, determine whether or not tax should have been charged. And again, remember, you might have to communicate with the people back in the plant. When in doubt, use the materials I just sent you. So again, I sent you the chart from publication 207 on real property, and I also sent you a list of taxable services. I want you to use that because that's going to help you determine whether or not something should have been taxed. Okay, record use tax accruals. As part of your process, record use tax accruals as you review invoices for payments. Pay the use tax with your sales or use tax return. Attach your use tax accrual work papers. Audits go well depending on how your work paper trail is. An audit with bad work papers is not going to go well even if you've actually paid the tax. An audit with great work papers is always going to go much, much better. So documenting when you're selling, remember to get exemption certificates. And I said most of you are very good charging sales tax when you should and not charging sales tax when you don't need to. But remember to get exemption certificates, and you can look at these slides to see what your exemption certificates requirements are. Make sure that you follow them. When you're exempting something, when you treat something as an exempt sale, make sure that you have a document. Again, getting confirmation from the buyer that they're exempt is never enough. It's all about the paper. Here's the requirements for exemption certificates. So do follow those. Make sure you're paying attention. Make sure that you have a process in place. Again, I'm going to talk about process all the time because it is so important. Your audit flags are going to be failure to report any use tax. Every manufacturer out there has use tax, some. A vendor's audited, a customer's audited, those are probably going to get you audited if the error is significant enough and if your name comes up enough. Claims for refund can show the department that you don't really know what you're doing. And certainly a prior audit with poor results can definitely lead to another audit. Defending an audit, again, it's all about the process. It's all about having good processes in place and document, document, document. So very important. Same with the sales, not that different. Have a good process in place, document, document, document. Check those exemption certificates. Make sure they're valid. And finally, again, if you've got questions, please do email me. We went very, very fast. We normally do this seminar in 2 hours. We did it in an hour today, so it was a speed race. And you can either email me or Peter. Thank you very much for being here and listening in.
Julie, look, we do want to let the audience know that we will be posting this webinar on our website, so you can view it again and stop and go back and make good notes. And watch for some emails that will be coming through, getting some feedback from you, and also looking for other topics that you would like to hear on other things that we want to talk about. So we appreciate you being here. Thank you very much, and have a great afternoon.